Hello and welcome back to another video. Today I want to discuss a couple of stocks that I have moved some things around or I may be looking at as new investments and going over some stocks that we've already discussed in the previous videos. If you want to go in more in depth with each one of these stocks, you can always go back to another video and watch that one and I'll go through a little bit more on income statements and things along those lines. If you like the video, if you gain any kind of knowledge from it, hit like, subscribe, and share with a friend. Every bit that you can do helps out tremendously. Let's get right into the video. ConocoPhillips, I've been covering for a few weeks now, and pretty much ever since the Iran war started. I just wanted to give a update on what I have going on with it. So they are actually at 52-week highs. They just hit on March 3rd, 52-week high, and we are playing with a resistance at 122.50 roughly. 122.50. It says that they're on the left side of the screen. And we have momentum to be able to jump up above that resistance. The reason why it's number one in this video today is I have increased my stop loss. My stop loss I have now set the 9-day moving average is 117.60 as of Friday, and I have raised my stop loss to 117.10. I normally try to go about 50 cents below a resistance. And that kind of allows me to hopefully that if we do come crashing back to 117, we don't actually jump down to 117.10 and I sell off and I continue growing. But if we do come and hit this resistance and come shooting back down to the 108, 109, I actually sell off and pull my profits. And then I'll start looking at another investment opportunity. Or if we continue jumping down, then I can always buy back in after I pulled some profits. So that was why it was number one in the list. I just increased that stop loss. Wanted to give you guys a little bit of info as to where and why. We're going to move into AMD. AMD is still a strong buy for me. We're just looking at after the earnings and the kind of soft guidance that they gave, Lisa Su did. Um, the other thing that's going on right now is Nvidia is actually starting to see competition. I know a lot of people believe that Nvidia doesn't have direct competition, but AMD is actually going to be direct competition, in my opinion. Excuse me, had to drink some coffee. And you have some of the other big, the Mag 7, they're coming out with their own chips, they're doing their own thing, and Nvidia, AMD is all there. But AMD is going to be a market driver, a huge growth market driver. So once it turns around and it launches, I mean, we're gonna be seeing those 250 marks again and and even possibly through that upwards of the $300 range. I'm still heavily invested in AMD. I'm gonna keep investing in AMD throughout this whole year. They got the 450 coming out later this year. That's going to ramp things up even further. That's all we need is some more good news on AMD, and it's going to be blowing the tops off of this. So right now we're at a resistance line. We're right at our 9-day moving average, but we're also following our 150. We're just below our 150. You can see we kind of bounced off of it a couple of times and then sunk us back down below our 9-day. And our 50-day is actually moving down as well. We're about to hit a resistance here. I believe that's actually going to spark us to go down a little bit further, which is absolutely fine. Great time for me to continue picking up. We haven't been back in this range since October 3rd. If we drop back down to the 160 mark. So anywhere below pretty much 208, I am still going to be buying. It's going to be a strong buy for me. I'm going to DCA in every single week. And anytime I sell anything else at profit, this is pretty much where it's going to be going. All right, one that I haven't discussed yet is Elf Beauty. We always talk about being diversified, right? In the market. You don't want to have all your eggs in one basket. You don't want to be too strong into one sector, right? Elf Beauty is cosmetics, lotions, that kind of line, and they're doing some really good things. They're growing, they're buying out other companies, things along those lines. That's just causing them to actually start seeing some pretty decent value for us to be able to really start buying in. Just wanted to show up their income statement for the last quarters, and just wanted to show how they're actually growing. So they did drop from Q3 to Q4 last year, but they've been growing fairly steadily. They just broke into the 490, and their net profit is back to where it needed to be. They had a couple of credit. That's what was going on here. They had some expenses that they didn't really account for in the last quarter. But from a year basis, they're growing pretty steadily in their sales and turnover, and then their net income is growing, which is good to see. They were down a little bit this last year from 2023 to 2024, and I think they got a lot of really good things ahead of them, and it also diversifies my portfolio. That's exactly what I'm looking for. Another one I'm going to start looking into because they've been going down is Bath and Body Works, and then you got not Eli Lilly, Estee Lauder is another one that is potentially a good buy right now. But I gotta do my own research, and I'll end up doing a video on some of those. I might just do a beauty and lotion video. We'll see. Um, but you can see we just hit a resistance line at 79.26 and we broke to the bottom side. Anywhere in this channel has been a great pickup. I'm going to be picking up some more. We do have some negative momentum right now. We ended up on a positive note, but I don't think we're going to come back up to 79. I think we might be coming back down and meeting that 70 mark, which once again, it's a great time to be able to pick it up. It's a company I believe in after doing my research. I think they got a lot of great things ahead of them, and they are going to be a buy for me. I'm going to start looking at picking up more. All right, Big Bear AI. A lot of people are saying this was going to be the next Palantir. Now, I don't know about that. They did actually cut their forecast after Q4 results. That's actually why I got pulled up on the screen right now. But they do say at the start of 2025, we set out to transform our financial foundation to establish a base from which to accelerate 2026. We have delivered exactly that. And that's from the CEO. They anticipate a full year of 2026 revenue to be between 135 to 165 million, and their estimates are 164.29. So hopefully they can actually beat on that. That would be huge for them. I just think that they are priced lower than what they actively should be. Their 52-week range was actually down towards $2.36. That was a great time to be able to buy. URA would have been at a pretty significant profit at that point. I do think that they're going to be a probably $7 to $8 company by the end of the year. That's kind of what I'm shooting for. I think they are doing things the right way. They're gaining a lot of contracts. Those contracts are going to start paying off. And I just think they're trying to set themselves up correctly. They had a expectation of loss of 6 cents per share, and they reported a loss of 1 cent per share. They're turning it around to become a profitable company, and they have some pretty nice growth going on, and that's awesome to see. I think they're going to continue that. We're going to take a look at their chart. You can see that they've kind of been on the downside here, but it's a great opportunity, in my opinion, to buy, especially down in this channel where we've been bouncing around. We're right at the top side of that resistance at 393. Anything below that, it's a great pickup. I'm going to keep buying and DCAing and lowering my dollar cost or my cost average cost basis, and we're hoping that they're going to have great things ahead of them. They're installing their checks at the airport, the security checkouts where they scan the baggage and stuff. They do a lot in that. They were expanding across a bunch of different airports, and so those they're going to start seeing a lot of value from that. They're reinvesting a lot of their money right back into themselves, and they're fulfilling these contracts, which is just great. So Big Bear is a buy for me. I know it's a newer one on the list. It's been struggling up here. It was no longer a buy, but now that we broke back down to the bottom side, I wanted to see what they had going on before I actually initiated buying more shares, and that's exactly where we're at. We're going to go into Novo once again, diversifying, right? I know I haven't really talked about Novo in the past, but we're looking at their income statement on an annual basis, and they're just killing it. They just keep growing their sales. Their operating income after depreciation's just skyrocketing. They're doing great things. It's fantastic to see. I actually think Novo is a buy, and I think they are extremely underpriced right now. We are playing around a resistance of 37.86. Anything below this is definitely a strong buy, in my opinion, and they have quite a bit of upside potential. They do have a few things going on. A couple of lawsuits dropped. They just dropped theirs against Hims and Hers, which helped out Hims and Hers price significantly. It also had a little bit of a spike up here when that was announced. But it is a drug company. They deal mostly in weight loss, and or that's one of their biggest sellers right now. Anyway, they just had the oral pill, which is actually what they were suing Hims Hers over misrepresenting a oral treatment form, and so that just got dropped. It's getting cleared up. I think this is they're going to see a lot of upside potential here in the near future, which is why I got them on the list as a buy. SoFi. SoFi, I talked about a couple of times before. I got their income statement pulled up. You can just see that they're increasing their sales and turnover as well. Their net income is definitely on the rise. They actually became positive in the last couple of years, and they are gaining. They are also lowering their expenses, their debt, which is fantastic to see. SoFi, I believe, is going to be a strong buy anywhere above or a buy above 1472. If it drops back down to meet that, I'm going to be locking up a lot more shares at that point. I may even start looking at a couple of call options for SoFi. I just think it has the value to be able to do that. Its 52-week high is 32.73, low of $8.60. It would been a great pickup at $8.60. I did actually trade SoFi back in the day around this range and made some good profits. I obviously did not hold until it hit 30 something dollars. I got stop lossed off, I believe, right in this range, and stop lossed out probably right here at that wick down. But that's exactly why we trade. I made my profit. I moved on, and right now we're right back into it being another buying opportunity. So I get to buy a couple more shares. The trade desk. A lot of people are concerned about trade desk, especially with the amount of competition that they're seeing, especially from Amazon and all these other companies that are wanting to do digital advertising, which is exactly what they do, but a contract with OpenAI. AI surfaced to the news not long ago, and I just wanted to show that their sales is still increasing. They're still growing. They're not at a loss. Their net income is growing. They're not seeing all the competition that everybody's talking about. Now, should they have ever been priced above $100? I don't know about that. Um, which they definitely were back here. At the time, they were a huge growth stock. The growth wore off and competition ended up becoming involved. They lost some contracts and they just shot down to the bottom side. But I view it as a great time to continue picking them up. Once they can prove that the competition doesn't really matter and they start landing some of these bigger contracts again, I think people are going to be rushing right back into trade desk, especially at this valuation, 27.34. That's a great price to be picking it up. All the way up to about that $37 mark, I'm going to be buying and DCing, and I see great things coming from this company. Once again, please do all your own research. Don't just buy it because I am. And then we get into what everybody's talking about as a value trap right now. They're saying it's one of the biggest value traps 2026. I don't know if I necessarily agree with that, and I'm going to show you exactly why. But we're talking about Adobe. That was the real reason of this video because it's one of my biggest um, holdings. It's a significant portion of my actual portfolio. Call options, I got some call options out on them, but it's a great time for me to pick up some more. Uh, that's my opinion. Please do your own research and manage your own risk. But you can see their sales still growing year to year. They're doing great things there. Their net income and they're reinvesting a lot of money. They're getting into the AI train, and I think they're going to see some substantial returns from AI. I don't think it's going to be exactly what everybody's thinking, AI versus SaaS. I think it's more or less going to be AI and SaaS, at least for the next few coming up years. The real reason why Adobe stocks crashed, the CEO for the past 18 years is retiring, and they did not have a CEO already in line. They were talking about um, one of their project leads stepping in, but it's not like he's just done completely. He's going to stay on the board. He's still going to act as CEO until they get the replacement and do everything proper. So hopefully we see some good things from that. Maybe they'll get some new insight in there and be able to grow the company into the AI space even further than what they already have started. We came back right back down to this resistance at the 244.57. We were just at it not long ago. We started seeing an increase. I thought good things were coming, and we came crashing back down. That just gives us another opportunity to buy more. I just showed you their income statements. They're still a growing company. Their gross profits growing. Their operating income before depreciation is growing. Their depreciation is actually going down in the past 3 years, and their operating income is increasing. Everything numbers wise is looking great for Adobe, in my opinion, and it's just the CEO. But I told you guys in previous videos, leadership is one of the key factors of how well a stock actually does. And once a CEO out of the blue talks about stepping down, you can see what happens. It's a massive sell off, and that was, we're talking about 1 day difference. We were just at 274 and now all of a sudden we're at 249. $20 shift. It's just insane what news can do. That's why we trade the news in our favor. I think it's still a great company. I don't think it's a value trap. I could always be wrong, but I'm going to continue buying Adobe. I see great things from them, and yeah, that's where we're at. If you enjoyed the video, hit the like button. If you learned anything, hit subscribe. Stay tuned to the next video. I'll see you guys in the next one.